Today, Ether soars past $2,000 as ETF optimism takes the reins. And Gary Gensler weighs in on whether an FTX reboot could happen here in the US. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Let's start with that major rally in crypto markets this morning. Bitcoin briefly surging above the $37,000 level, while Ether tipping past the $2,000 level. It's once again all about the potential for spot crypto ETFs. The gains really took hold after signs that asset management giant BlackRock is gearing up to propose a spot Ether ETF, very similar to the spot Bitcoin ETF that it proposed earlier this year, that people are very excited about. Now that sent prices of ETH spiking mid-morning. Then we also need to talk about FTT. That's the troubled crypto token hailing from the failed FTX crypto exchange. Well, the FTT got a huge boost, nearly 90% at its peak, after some comments from SEC Chair Gary Gensler at DC FinTech Week. Okay, let's jump to those comments because I was at DC FinTech Week and sat down with Chair Gensler to talk about a whole host of topics, including FTX and whether that company could make a return after reports that former NYSE President Tom Farley is looking to help the exchange restart. Farley had previously launched his own digital asset exchange back in May called Bullish. That firm is reportedly one of the final contenders in FTX's bankruptcy auction. Here's what Gensler told me.
If Tom or anybody else wanted to be in this field, I would say do it within the law. Build the trust of investors in what you're doing and ensure that you're doing the proper disclosure and also that you're not commingling all these functions, trading against your customers or using their crypto assets for your own purposes.
Now, of course, I also asked him about the slew of ETF applications in front of the SEC right now, particularly how he feels about the growing demand in the industry for these new funds.
We've had something called a Bitcoin exchange-traded fund, ETF, since I think it was the fall of 2021. So we approved that back in the fall of 21, and now there's these new filings with a different underlying Bitcoin spot rather than Bitcoin futures. But we've had this, I'd say, for 2.5 years now. The SEC wins if investors are protected. That's really what it is. We're technology neutral, and whether it's a Bitcoin ETF or whether it's anything else in the crypto field, it's about protecting those investors, making sure they get the time-tested disclosures, and then they get to decide what risks they take.
Gensler and I also talked about regulation, especially as governments around the world race to impose new guidelines to make them a crypto hub. Here's how he thinks the SEC fits in.
There's nothing about crypto that's incompatible with the securities laws. The securities laws are there to protect your viewers and the investing public so they get the proper disclosure and people aren't sort of using their funds on their own behalf. And so I think that we've got robust laws in the US. It's that there's a lot of worldwide actors that are currently not complying with their time-tested laws.
And finally, I of course asked him about his reaction to the Sam Bankman-Fried verdict, what it means for the SEC, and how they plan to tackle the crypto industry.
The Securities and Exchange Commission also brought a complaint against Mr. Bankman-Fried. But just if I can step back and talk about crypto for a minute, too many Americans aren't getting the protections that they deserve about disclosure, real disclosure in this space. And there are too many fraudsters and scammers in this space and where people are getting hurt. And it wasn't the only company that went bankrupt and, as we've alleged in our complaint, misled the public. I think this whole field, the challenge of it is it was founded when Satoshi Nakamoto wrote that seminal white paper 15 years ago. It was about being off the grid, away from central banks, away from commercial banks, away from official sector. And so it's kind of built up around that. And it's like a digital bearer instrument to avoid money laundering or to be used by terrorists to fund bad things and to kill people. So there's a whole field here that I don't think it's about one entity and one bad actor. And you could say that was alone, because by the way, there's been multiple bankruptcies, multiple frauds, too many to name on this program.
Okay, let's also mention a few other stories you should be in the know about. Stablecoin issuer Circle is reportedly eyeing an IPO. According to Bloomberg, the company behind the USDC stablecoin is talking to advisors ahead of a potential public listing in 2024. In fact, Circle told the outlet that becoming a US-listed public company has long been part of its strategy. And as a reminder, Circle did try to go public before. In 2021, it entered an agreement with a SPAC, a kind of company made solely with the purpose of buying another firm to take it public. By the end of 2022, though, that $9 billion deal had come crashing down. Last up, a new bill in the House could ban the U.S. from using blockchains developed in China. The Clarity Act, proposed by Republican Congressman Zach Nunn of Iowa, aims to bar federal agencies from using blockchain services and equipment from China and other foreign adversaries. It would also restrict the government from working with iFinex, which is the parent company for trading platform Bitfinex, and for Tether, creator of the USDT stablecoin. Okay, one last thing before we go. Yesterday we spoke to Robbie Ferguson, the co-founder and president of Web3 gaming company Immutable, about the vision for the future of gaming. Well, today the company just announced a new partnership with AAA gaming giant Ubisoft. The developer of games like Far Cry and Assassin's Creed is partnering with Immutable on a Web3 gaming project focused on digital ownership. All right, that's all for Crypto World today, but we will be back again tomorrow, and we'll see you then.